Happy Friday guys, and welcome back to the channel. We can see we've gapped down again and held, just looking at a 15-minute chart here of SPY, and we finished near the highs as well today. If you're watching the channel yesterday, you saw I came in today 100% net short in my portfolio. I've had a good day, I hope you have as well. Stay to the end, we're going to go through a lot of data and interesting themes in the market, and I'll tell you how I'm positioned going into next week. So before we continue on with the charts, I just wanted to show you a bit of data. Just looking at the heat map here of all the big sectors. So this is today's performance, and there's actually an interesting rotation today. The biggest rotation we've seen so far this year out of high growth cyclical tech into defensive. So you can see the healthcare sector here had a good day. Consumer defensive had a good day. Utilities had a good day. And so did defense and industrials. And we really saw energy come off today, and the cyclicals and tech stocks. And we'll just show you the 1 week performance, how we did this week. So overall, a little bit flat except for energy. Energy came off pretty hard. And industrials have actually done well, and defensive. And we'll just look at year-to-date performance. So you can see, look at this, Apple up 17% year-to-date. Amazon still up 15% year-to-date. And the healthcare, energy and defensive utilities still down year to date. So year to date, the theme has been the rotation into growth cyclical, what was beaten down much last year. Okay, so I'll come back to this rotation later in the video in the charts, but let's just keep moving through some data. So here's the fear and greed index, still elevated at a 6.8 level. 68 level. And typically when we're up here, that's associated with short-term market tops, but as you can see, they do take some time to form. So technically speaking, with sentiment data, which is typically contrarian, it still looks to be putting in a top. However, we've got the dark pool index still elevated up here at 50%. Anything above 45% is considered bullish. So this is an index of the amount of bullish positions being taken in dark pools, which is typically institutional big smart money. However, it does seem to be forming a bit of a topping formation like we've seen in the past and come down. So this could be starting to roll over as well. Interesting theme this week is increased rates. So we've gone from just 2 weeks ago, the market calling for a Fed pivot and pricing and rates going down, to now, look at this, a week ago where the market Fed fund futures were pricing in a 9.2% chance of a 50 basis point hike. Today it's 21%. That's more than double. So, and I expect this to grow as well. So there's a possibility now, a real material possibility, that we get a 0.5% rate hike on March 22, which that is bearish for stock equity risk sentiment. Insiders, they've been selling into this rally. Corporate insiders are typically good at timing the market and their own stock, and they've actually increased their selling this week as well. Economic data today wasn't too much out, just export prices are actually grown a lot more than expected, so that's bullish for the US dollar. And next week we've got a whole bunch of economic data coming out: manufacturing PMIs, jobless claims, personal income spending, and new home sales. So that'll give us more reads on inflation and the consumer. Okay, so back over to the charts. NASDAQ was off the most today, and we'll just switch back over to a daily chart. And we haven't had a 2% down day in the NASDAQ since back here for 2 months now. All year we haven't had a 2% down day. And we just keep gapping down and holding, and that just seems to be the theme, that there's just seems to be a lot of bids out there in the market. The market tries to go off, there's high rates, it's ready to turn, and then it just hits a wall of bids. So that's just something to note, that's been really persistent in price action this year. The dips keep getting bought. Over to small caps, they're holding on as well on volume. International indices were mixed today. Did have China off 2%. That is trending down under its 50 bar. Right up the front, volatility nosedive 12%. The VIX not so much. It was basically flat and just sitting right here on a 20 handle. Volatility of volatility is just basically flat as well. Put call ratio, we see a bunch of puts being bought today. So that could be a combination of the meme stock crowd pulling back on their call buying, or there might be some big hedging going on going into next week's economic data, and maybe some hedge funds placing some bets on a correction in the stock market as well. Here's the rotation to visualize the rotation today this is the SP high beta ETF versus the SP low volatility ETF, and you can see right since late December it's just been a straight line up, and that's been broken and actually came off a lot today. So even though the market was only down 0.25%, you could almost call it flat. We've had high beta stocks come off 2.32% versus low volatility stocks. So that's quite a rotation and interesting to see. And we can see that in growth versus value, and tech versus SP a little bit. But small caps have actually bounced. So there's quite a few themes going on here in the market. It's actually a little bit of a tricky market, so we'll keep getting into that. High yield versus treasuries actually held today. The 10-year actually came off 1.1%. And I won't get into it too much because I've dived into it a lot this week already. But here we go. September implied Fed Fund futures actually made a new high today, up at 5.31. So, and this is strong walk the line bullish price action. So that's headwinds for risk settlement and the cost of capital. Treasuries actually bounced and put in a bit of a bullish engulfing here, and high yield has held too on a bit of a bullish candle on this trend line. So that's interesting. You know, we've had a rotation out of high growth cyclical, but then we've had high risk debt actually hold and put in bullish price action here. Dollar was flat with all that, but still holding this bull flag pattern. And Bitcoin, Mr. Risk himself, is actually looking bullish and is holding this level around here, even in the face of all these regulatory crackdowns. So that's interesting price action as well. Commodity complex came off a little bit. Dr. Copper just holding himself, sitting flat at his 50 bar. Silver put in a bit of a bullish engulfing down here at oversold levels. And we've had oil gap down, but did hold its gap, but still off 2%. Nutty gas, throwing in the towel on this one. I'm out of the long trade. As I said yesterday, I thought it's going to come down here and take out all these stops. We tried to nail a low down here, and then momentum did stall up, and then I just think the market's gathered a lot of longs, and the market sniffed that out and got us. So this thing is just a steam train, and for now, I'm out of this trade. So it was just a small loss. Moving on, we had the IPO ETF off on 3% on volume today. So this is all new stocks that have come to the market. ARK actually sold off a bit this morning, but has held and put in a hammer formation. Same with clean energy and tech as well. Semis came off a bit, and look at biotech, up 2.3% today. So that was the outperforming sector today, biotech. A lot of mixed breadth out there. So we had biotech up 2.3, energy down 3.5 on volume, oil and gas down 4%, and we had financials hold on. And the sectors I like at the moment, industrials just sitting there, bullish consolidation price action actually up today, and defensive stocks 0.42. So I'll get to that in a bit later with my final positioning. And here's what we've been talking about today, the rotation into defensive. Look at healthcare sector, bullish engulfing on big volume, staples as well. Look at that, it's a big bullish candle for you. And utilities up 1% as well. So could this be the start of this rotation that we've been looking at basically all year? We could see a retracement of this rotation, even if it were to continue and that becomes a dominant theme of this year. This could be a start of a 50% retracement. Looks like that way, and wouldn't be surprising with the run we've had. Over to popular stocks, BlackRock Barometer holding as well down here at support. Apple came off a bit. It's had such a great start to the year. Microsoft off a bit as well. Google's sitting here holding, and come back to the channel later today because I'm going to upload my deep dive into Google and how everything that's going on with OpenAI and Microsoft is going to affect its future and what my outlook is on the stock. Semis were off a bit today. We had Nvidia down 2.8%, but seems to be holding this little basic support line just here that we'll draw in 208. Netflix was flat. Barber was off 3%. It's gapped down to a new low again. Definitely is pulling back with the overall China market. And Tesla, strong price action. One of the strongest signals you can see in a market is when bad news comes out and then price rallies. So yesterday we had Tesla coming out with 362,000 cars that need technical recall. That's an excuse for it to sell off along on top of its top run. But look, today it's dipped down and then just held strong. If we go to a 15-minute chart, that's just the dip being bought right there, and on volume as well. It's just still doing such big volume. I mean, 211 million shares today, which is just huge for a $200 stock. So this thing is just a motorboat. I would not get in front of here. Moving on over to meme stocks, a little mixed out there. Just sitting around pretty flat, nothing too dominant theme going on in meme stocks. And active today was DraftKings. They came out with a bit better than expected earnings. Market rallied 15%. Okay, over to the market and how I'm positioned going forward. So you knew I came in today 100% net short and did well. However, the market had every reason to sell off and have its 2-3% down day that we've been looking for, and it just didn't. It just held. Even with options expiry today, huge. I think it was $1.5 trillion notional value of options expired today. It had every reason to have created a big move today, and we've just held on a hammer on volume. So I just can't ignore that, even though there's a lot saying this could roll over, especially with what's going on with rates, sentiment data, and so forth. I just can't ignore that bullish price action that it's been held. But it's tricky because we also had high beta and low volatility rollover. So I'm still overall bearish here, but because of this supporting price action, we just keep gapping down and holding, gapping down, hold, gapping down, hold. There's just dip buyers out there, and they may break whatever it is. It may break, but because of that, I reduced and I actually found some long setups in industrials and defensive stocks. So because of that, I reduced my positioning from 100% net short to 60% net short going into next week. We've got a lot of economic data coming out next week. And typically I don't like to be too heavily tilted one way going into a weekend either. So 60% net short is my positioning in the portfolio going forward. And another thing I just wanted to speak about today is our strategy. A lot of you guys may not know, we run a equity long short strategy over on Collective 2. If you're not aware, Collective 2 is a marketplace where you can follow strategy managers like ourselves, and you can get all our trades sent to you in real time through email, or you can pay a little bit extra and have them automatically traded in your Interactive Brokers account. The cost is just $60 a month, and we're so far our portfolio is performing really well with low volatility. We're up 15.6% since December. The maximum drawdown on that time is 2.9%. A model portfolio, $50,000, is now up to almost $58,000. It's collected $180 in dividends. Only has 6% correlation to the SP. Currently tracking on a Sharpe ratio of 5, and we only use a little bit of leverage. So an average 1.35. So just 135%. Just a little bit of leverage. And you can come over here. I'll put the link in the description. You can read of this video, and you can read what our strategy is about here in the description tab on the Collective 2. And so the portfolio always carries 10 stocks long and 10 stocks short, all weighted at 7.5% each. And so the portfolio is always market neutral. It's a classic hedge fund strategy of long short. And we use a quantitative and qualitative selection criteria to determine what stocks are added. And we send a monthly newsletter to all our subscribers, keeping you informed of how the market's performing and some commentary on the portfolio. And it's going forward. And if you're worried about if the market comes off, this is a portfolio that can profit during a bear market, sideways market, and with very low volatility as well. So if you're looking for a hand with your trading and you want to follow this in real time, it's just $60 a month, and you can give it a try. I'll put the link below the description in this video. But that's all for today, guys. Thanks very much for watching. I hope you're finding some value with these videos. If you are, I'd really appreciate a like and subscribe. That really motivates me to keep going. And as always, if you've got any questions about my analysis or any critiques, I'd love for anyone to critique it. I've got an open mind of where I could be wrong. You just pop a comment down below, and I'll be happy to discuss with you whatever it is you want to discuss. Other than that, have a great weekend, and I hope to see you again on Monday afternoon after market close, and we'll talk about price action then. Okay, take care.